Happy New Year, everyone. I hope everyone's having a great start to 2022. And in this video, I'm going to be sharing my financial outlook for 2022 in the US stock market, such as the large indices like the Dow Jones Industrial Average and the S&P 500. I'm also going to be sharing my perspective on Bitcoin in this upcoming year and its implications to the larger cryptocurrency market. And I'm also going to be sharing my thoughts on where I see consumer prices going, what a lot of people think of as inflation. And lastly, I'll be covering the commodity market. So if any of these topics or markets are of interest to you, then stay tuned. First, let's talk about the US equity market. In my last two videos, I analyzed the US stock market through both a technical and fundamental lens and justified why, regardless of what form of analysis you use, you come to the same conclusion, that the US stock market is in a massive bubble. But we know something about bubbles. Bubbles can last a very long time. If we look back in history and look at the mid-90s to the late 90s and how long that market went up and how relentless it was, and we also think about how long it held above significantly overvalued levels. It's crazy. But we also know that bull markets come to an end, and that bull market did in early 2000 and led to a double dip recession that had negative returns for over a decade. So, and we also can look at present day and how crazy this market has been for the last year and a half, almost 2 years straight, just going up, and how that's only the culmination, part of a longer bull market that's been going up since 2009. And so, it's pretty crazy to think about how insane this market is, given that it is the longest bull market in US history. But the question is, how is it going to perform in 2022? Well, my perspective on this hasn't really changed. I think the US stock market is in a very, very dangerous position. And I think it actually affords the worst risk to reward proposition out of any market that I've seen, any large market. I'll talk about that more in this video. But in my perspective, I think it's very likely that the US stock market is going to have a very significant top this year, sometime this year. So let's go ahead and look at the charts real quick. First, let's take a look at the Dow Jones Industrial Average. This is the weekly chart. Here's the Corona crash back in 2020. And since then, we've just been going straight up, more or less. So this looks like a first wave to me. And again, I use the wave principle, which suggests that markets go up in 5 wave patterns in the one larger trend and then correct in 3 waves against the larger trend. So I'm kind of counting this as a first wave right here, this being a second wave, and this being a third wave. Now, it's possible that you could count the third wave being here and this being a fourth wave, and then we go up. But right now, my working theory is that this or this could be the fourth wave. And if we violate below the fourth wave, then that could suggest that the bull market has ended. But it's a little bit fuzzy right now. It's not the cleanest chart. This move since May of 2021 has been very ugly. It's been a sideways move, which is very characteristic of a wave 4. And so it's just, where do you actually put that labeling? But in my perspective, I think this level right here is a very likely wave 4 bottom, which is very proportional to this wave 2, and it makes sense. So if we violate below this wave 4, I think this is an early indication, a very early warning sign that a bear market may be upon us. It's a much earlier signal than this level, all the way down here at 29,193.6. Again, these levels are based off of the cash index and also the futures data. So these numbers might be a little different if you look at the cash index, because this is taking into account the Globex session after hours. But this level right here, when violated, I think will be clear indication that the bull market has ended. And again, it's not just this 5 wave trend since March of 2020. This is just the 5th wave of a larger 5 wave sequence that I think will be complete, that traces its origins all the way back to 2009. So this is a very, very, these are very bearish implications here on this chart, and I think we are closer to ending this 5 wave move up than we are, let's say, just beginning it. So this 5 wave pattern has already outlasted wave one, which took place from like 2009 to 2010. It's already lasted longer than that first wave, and so this is very, very mature in its progress up. The most bullish perspective that you could have on this chart is that you count this all as a third wave, and this being the fourth wave or part of a fourth wave. If this is the case, then this level will be no good because it can be violated, but still result in further highs before this bull market has ended. So, it's not super clear, but I would say that there is probably a greater than 50% chance that if this level is violated, that will signal that a market top is in. And why that's important is that this is not just any market top. I'm thinking based off my analysis and how long this bull market has been. It has been the longest bull market in U.S. history. That this top that will eventually be put in place will be just as significant, if not more significant, than highs such as the 1929 high, the 1968 high, or late 60s high that preceded the stagflation period, and the early 2000 high that led to the decade-long bear market, including the financial crisis in 08 and 09. So, this is a very important, kind of time right now. And it could be very significant when we look at it from a long-term kind of stock market history standpoint. So it's going to be very interesting. When we look at the S&P 500, it's a pretty similar story. And in my perspective, if the S&P 500 violates this level right here, this red line, which is basically the same level here in the Dow, it bottomed right around the same time in late September. I think if both the S&P 500 and the Dow Jones violate those corresponding levels, that it will be very strong indication that a market top may be in. Similar story here for the S&P. Looking at a 5-wave move going up since 2020, something like this, and this being a fourth wave, or at least part of a fourth wave, and going up. If this level here is violated, that will be very strong indication that the larger trend since 2020 is over, and also the larger trend since 2009 is over. So it'll be interesting to see how this market continues to progress. Again, this is the obvious level that would signal the bull market has ended. Since wave 4 is not really clear here, it's clear here in the S&P, and I actually favor this as being wave 4 compared to the Dow, because the Dow's move has gotten so ugly, and it hasn't really confirmed a fifth wave going up after this consolidation. So this level here in the S&P, which corresponds to the same level in the Dow, actually looks like a pretty good level. And if violated, I think will be an early warning sign for an impending bear market. So that's my perspective. I think the risk to reward here is just terrible, because again, the market could continue going up. The trend is your friend. This trend is not broken yet. It could continue higher, but the risk is massive to the downside. We're talking definitely more than 50% decline as being the risk, and the reward 10-15%, like looking at it in the most generous terms. I just don't see the upside justifying the risk at all in the U.S. stock market when we're looking at the major U.S. indices. Certain individual stocks could be different, but again, for the U.S. stock market here, the big indexes very overbought and look very dangerous to completing their longer trends. So that's my perspective here. Very bad risk to reward, but again, the trend is still intact. So the bull market's still intact. And as long as these levels aren't violated, bulls are still very much in control and could continue higher in 2022. But um, my working thesis is that this 5 wave trend will complete and will result in a top in this market sometime in 2022. I think it's more than likely that that will be the case, but anything can happen. So we'll see what happens, and I'll be sharing updates on my Instagram and Twitter, and probably here as well when I have time. So again, my Instagram and Twitter for my short-term updates are in the description below. It's much easier for me to shoot out a chart and write out a quick caption to update my thoughts as more information is received, because things can change very quickly in these markets, as you guys probably know. So the next thing we're going to talk about is Bitcoin. So Bitcoin has been in a consolidation basically since April of 2021. Now, again, this is the log scale here. So this is why it looks maybe a little bit different. And we're looking back at data all the way going back to 2017. So since this bear market in 2017 into late 2018, we've had a 5-wave move forming. And so wave 1, wave 2, and wave 3 are fairly self-evident. Now, the question here, which is actually the same question that I posed in my video a while back in probably like September or something. Yeah, September of 2021, is whether or not wave 4 is over. And unfortunately, that question still has not been really clearly answered. Here's one count. This is the bearish count, or this is all 5 waves up, and the bull market is topped, and now we're going down. I think this count is less than likely, but it's definitely possible. The other possibility is that this is wave 4, and this is just wave 1 of 5, and this is wave 2 of 5. And as long as Bitcoin doesn't break below 28,800, it could be different depending on what chart you're looking at. But basically, this June 2021 high, as long as that level is not violated, then we'll be going up in a wave 3 of 5, and this wave 5 will be extended. That's one perspective. I don't really favor that one either, but it's definitely possible. And the other perspective is that wave 4 could be extending in a larger and longer sideways kind of pattern, and that wave 5 hasn't even started yet. Personally, I actually favor this count. The trouble with this one, though, is that this wave can really only be a triangle, a running triangle. It could be a flat, but that would bring, if it's a running, or if it's an expanded flat, then it would break below 28,800. And, given the structure and that this would have to be a 5-wave move down, that would go down a long way. And, I don't really favor that. So to me, I think it's very likely that Bitcoin is forming a larger wave 4 that will be sideways and may look something in the ballpark of this. A B, and see B ended up taking out the top of wave 3, and then we have a C here, a D, and an E. This is like just a very simple schematic of it. Might be ugly or whatnot, but this is kind of a possibility that I'm looking at. It might, but it's too early to tell whether or not it's actually tracing out a running triangle. It could also be tracing out an expanded flat. I don't favor the expanded flat interpretation, but it's a possibility. I'll make another Bitcoin video. I'll try to make one the next few months when there is more clarity as far as what the pattern is doing. But again, I do a lot of updates on my Instagram and Twitter. So if you're interested in those, definitely check it out because I do a lot more updates on it. But again, this level right here, 28,800, I think is probably the best level because it keeps intact 2 of the bullish possibilities, which are that this is a sideways triangle, or that this is just a wave 1 and 2 of 5 before a 3 of 5, 4 of 5, 5 of 5 goes up. So 28,800 is a really key level at this time, and I'm keeping an eye on that very closely. And I'm bullish in 2022 as long as Bitcoin holds above 28,800. So that's my perspective on it. I think Bitcoin affords a much better risk to reward proposition compared to the US stock market, because the US stock market definitely has an over 50% decline as being very much possible in the next several years. And I think Bitcoin also has a potential negative, negative return, big, 50% plus drop potentially, if this is the count, but I don't prefer this as the count. But again, my point is that Bitcoin and the US stock market both have a lot of downside potential, but at least Bitcoin has upside potential to perhaps justify the downside potential for investors that have high risk tolerance. It's like, if you're going to take on a lot of risk, at least have the upside, as being a potential. Whereas a stock market's like very low potential returns, very high risk. It doesn't seem like a good deal to me personally. Not financial advice, but just my 2 cents here. So this is the look on Bitcoin, and I think if Bitcoin stays bullish, then that'll also probably fare well for the rest of the cryptocurrency market, which has been really, really hit lately. A lot of money has come out of the crypto space lately, given this very large decline. This doesn't look large because it's on the log scale, but just to see how big of a drop this has been, it's been from 69,000 down to around 41,000 where it's at now. So this is nothing trivial at all. But personally, I'm still bullish, especially above 28,800. That's my perspective right now. But again, I make updates on Instagram and Twitter, and things are subject to change. So I'll be quicker to update on those channels compared to here. But next, let's talk about consumer prices. This has been a hot topic because consumer prices have gone up a lot. And a lot of people think of this as inflation, but again, inflation is a monetary phenomenon. I've talked about this a lot on this channel. I'm not going to talk about it too much in this video. If you're interested about my deeper thoughts on this, there are a lot of other videos on my inflation deflation playlist. But consumer prices, looking at it not from a monetary phenomenon, but just where are consumer prices likely to go? Well, I have 3 reasons for my perspective on this. And my perspective is that we are likely to see disinflation, or consumer prices going, perhaps still going up, but at a lower rate. And it could be at a lower rate, or it could be outright deflation. I don't know. But my perspective is that at the least, we may still see consumer prices going up, but it will likely be at a lower year-over-year rate. My first reason for this is more of a technical observation based on this chart right here. And this shows the 12-month percentage change in consumer prices. And we can see here that since the last important low here in May of 2020, which preceded this craziness in consumer prices rising to almost 7% on a year-over-year basis, I see a very familiar pattern here that's come from a key low here. Wave 1, wave 2, wave 3, which is the longest wave, very, very consistent with the wave model, and wave 4 and wave 5. And wave 5 goes up from 5.3% to 6.8%. That's a 1.5% increase. And right here, wave 1 goes up from 0.1% to 1.4%. It's a 1.3% increase. So wave 5 is just a little bit more than wave 1, very much proportional, which that is the most common relationship that wave 5 has, is being about 100% of wave 1. So to me, when looking at this purely from a technical standpoint, not taking anything else into account, I believe that this looks like a 5-wave pattern, which suggests that there's a high likelihood that you're going to see this figure right here, this 12-month percentage change in consumer prices, start to trickle down once this 5-wave pattern is complete. This is not 100% kind of thing. Again, all of these kinds of observations and perspectives are based off of probability, not certainty. But I think this is kind of a cool observation and how clear it is. And this might look like an ugly chart, but we can also see here the last important high that we've had, that led to outright deflation, also was preceded by a 5-wave move up. And we can see that right here, starting in 2006, went up 1, down in 2, up in 3, up to close to 4.5%, down in 4, and topped at over 5.6% in July of 2008. This was a time where people were talking about inflation, and very similar kind of sentiment to today. And this then was followed up by the financial crisis, where we actually saw outright deflation, not only in consumer prices, but also in monetary and credit terms. So I'm not necessarily saying that we're going to be seeing outright deflation. That's a very real possibility because the whole setup is in place. We have crazy amounts of debt, a very fragile and fractured economy with, and let me not be mean, I wanted to say incompetent Federal Reserve, but you guys all heard that. And then also, a financial system that is extremely, weak and dependent on a bunch of monetary stimulus and also federal, stimulus, when we're looking at stimmy checks having to be casted out to the public because there's no actual, borrowing and loaning and, normal kind of credit expansion happening. So, that's the second reason why I don't really think that we're going to be seeing very, very, higher prices in the future because the monetary setup is not there. And this is more a fundamental view compared to this technical view of, this figure going up in a 5-wave movement. Many of the factors that would lead to a kind of repeat of stagflation are just not there. And so given that, I don't think that the factors and causes that have created this massive amount of consumer price inflation is sustainable. And therefore, since I don't think the cause is sustainable, I don't think the results will continue to be the same. And so my working thesis is that we're likely going to see disinflation from here on out, if not outright deflation. That might not be immediate, but I think 2022 will be more characteristic of disinflation than massive rises in consumer prices. That's my working perspective on this. It'll be interesting to see how this pattern continues to evolve and whether or not we're close to a top here in the month over month rise in consumer prices on a 12-month basis. And my third reason for why I don't think consumer prices are going to continue this crazy upward trend is because sentiment is so inflation. And I saw, I was just overheard it on the news that, oh, the data's in, the economists are all saying that they're expecting higher and higher prices to continue in 2022. Well, usually economists are wrong about these kinds of things, and usually they just jump on the larger trend. And just because it's happened in the last year doesn't mean it's going to continue in the next year. These kinds of things I think are more caused more by supply chain issues and just production, manufacturing, all these different kinds of things that I think have been the main driver in consumer prices going up at the clip that they have. Federal, fiscal stimulus and monetary stimulus from the Fed, I'm sure are partial factors in it, but I don't think they're the main drivers, nor do I think they are sustainable factors that can continue to cause these kinds of results. So that's my perspective on it for 2022. I'm expecting disinflation to at least start to progress, and definitely the risks for outright deflation and not just a liquidity crisis, but an insolvency crisis are still there. But again, that's more of a bigger picture view that might not actually culminate in just the next year, but that's more of a 5-year perspective because the risks are definitely there. And lastly, let's check out commodities. So if you're concerned about inflation, concerned that prices are going to continue going up and we're going to see a repeat of 1970s or whatnot, you're probably quite interested in commodities, precious metals, those kinds of things. Um, in order to kind of represent that here is a ticker GSG. It's a pretty widespread commodity exchange traded fund ETF. Um, and it really covers basically the whole broad energy market. You can check it out to see exactly what the composition of it is, but it's fairly neutral and really covers just about everything when you're talking about commodities. So, and something I like about this sector compared to the U.S. stock market is that commodities are historically underpriced and they do have high potential for gain. Like Bitcoin and cryptocurrency, though, they also have very, very high risk. So again, when I'm looking at this for 2022, I see three markets. I see the stock market being extremely, extremely risky and having limited upside. So high risk, low reward. I see cryptocurrency and Bitcoin specifically being high risk, high reward. And I see commodities also being high risk, high reward. So, I see the US stock market as being the worst proposition. But, back here into the commodity market, you can look at this in two different ways. This is the massive crash following 2008, where gas prices were just crazy and commodities were soaring, and people just thought they were just going to continue going up or whatnot. Here's wave one, the massive crash into 2009. You can count this as wave two, wave three, wave four, and wave five. So you could count this as a completed trend, a complete 5 waves down, and now you're going up in a larger trend to the upside following this. You could also count this as an extended wave three. So 1, 2, 3. Well, actually, it'd be 1, 2, 3, 4, 5. This all being 3, and then you could count this as just a wave 4 before we have another low. So this is where the high risk comes into play, because this is a over 60% drop from where we are now to this low, violating below that low. So very high risk. If this ticker breaks above this low right here at 2185, I think that would confirm that the low is in. That still means a considerable amount of potential losses, because even here at around 22, that's about almost a 70% drop to here that you're taking on when holding onto that risk. So very, very risky, but the nice thing about it is that commodities are historically undervalued. As you can see, they've been going down in a bearish trend for over a decade, and finally have been performing well in 2021. Will that continue in 2022? Well, that's a very short time preference. And I'm pretty neutral in 2022 for commodities, while acknowledging their high risk and high reward. It already looks like they've had quite a substantial move up, and it may be close to starting a correction. This could be counted as 5 waves, but I actually could see it taking out another high here eventually. You count it something like, you could count it a couple different ways. You could count it as being complete, wave 1, wave 2, wave 3, wave 4, and wave 5. But you could also count this as being all wave 3. And I think that's a reasonable count. And this could be wave 4 right here, or it could just be part of wave 4 of a sideways move, kind of like what I'm seeing as a possibility in Bitcoin, before we have another high. But regardless of when that high comes into place, or whether if it doesn't come into place, I do see probably more short-term risk in commodities than reward, because this already looks like, this is, let's see, from the low here at $7.50. This ticker has already gone up almost 150%. So it's very likely that we're going to see some kind of proportional correction here in both terms of magnitude and time, which could actually take a lot of 2022. But again, pretty neutral about this in 2022. It could continue holding up in 2022, then correcting in 2023, or we could have the correction earlier and then start going up, if this is all complete a trend, then there could be a sharp correction, and then the possibility of highs, if we come down and then head back up. But a lot, a lot to be seen in this market. And personally, I'm not involved with it because it's not at a clear point right now. But I do think it has better better odds compared to the U.S. stock market, personally. And both of them are still in a bullish trend. So short term, the trend is intact. The trend is your friend until the trend is not your friend, and that's when you get a change. So I'm definitely going to be staying alert to those possible changes and new information coming that could kind of signal a turn in some of these markets. But until then, I'll be making updates here and there on Instagram and trying to make some good content when I have time on here. I would love to hear your perspectives on what you see happening in 2022 with these markets and other markets, whatever you find interesting. I'd love to hear about what you're looking at and what you're looking forward to in 2022. So that being said, thanks so much for watching, and I'll see you all next time.